Hello friends, and welcome back. If you are a retiree or someone who is counting on Social Security or any kind of government benefit, I need you to stop what you're doing right now and pay close attention to what I'm about to share with you. Because there is a mistake that thousands of Americans are making right now, quietly, unknowingly, and it could cost them hundreds, or in some cases thousands of dollars before their very next payment even hits their bank account. I know that sounds alarming, and honestly it should. Because most people watching this video have no idea this is happening. They go about their day, they trust that the system is working for them, and then one day they open their account and something is off. Or worse, they find out months later that they missed something they can never get back. Today, we are going to walk through every single thing you need to know before your next payment. We are going to talk about what can go wrong, what rights you actually have, what the government is not sending you a letter about, and what steps you can take starting today to protect yourself. Stay with me until the very end, because the last thing I share may be the most important of all, and most people turn off the video before they ever hear it. So let's get into it. Before we dive into the details, let me tell you what we uncovered putting this together. Our team went through official Social Security Administration guidelines, recent Medicare policy updates, IRS bulletins, and some of the most recent legislative changes that have quietly gone into effect. We also looked at reports from senior advocacy organizations, consumer protection agencies, and government watchdog groups. This is not speculation. This is documented official information that affects real Americans right now, people just like you. And here is the part that bothers me the most. None of this gets sent to your mailbox in plain English. The government puts this information out there, buried in dense policy language that most people do not have the time or the energy to wade through. That is exactly why we do what we do here. So if you have not already subscribed to this channel, now is the time. Every single week, we take the information that matters most to Americans 50 and older, the benefits updates, the rule changes, the deadlines, the things Washington is doing that affect your wallet, and we break it all down in plain language so you can actually use it. Hit that subscribe button and make sure you never miss an update that could affect your financial future. Now, let's talk about what is really going on. Number one, the payment timing trap that catches retirees off guard every single year. Most people think their Social Security payment just shows up on a predictable schedule. And for the most part, that is true. But here's what most people never realize. There are specific circumstances that can delay, redirect, or in rare cases, even interrupt your payment. And the window to catch those problems is extremely narrow. Here's how this works. Social Security payments are tied to your birth date. If you were born between the 1st and the 10th of the month, your payment comes on the second Wednesday. Born between the 11th and the 20th, your payment arrives on the third Wednesday. And if your birthday falls between the 21st and the 31st, you are looking at the fourth Wednesday of each month. Simple enough, right? But here is where things get interesting. When a scheduled payment date falls on a federal holiday, the SSA moves the payment to the business day before, not after. Most people assume their money will come the next business day. They wait. And in the meantime, bills are due, automatic payments are processing, and suddenly there is a shortfall they were not expecting. This is not a government error. It is a policy that most beneficiaries have never been told about directly. Now add to this the issue of bank processing times. Your bank may receive the electronic transfer from the SSA on time, but certain institutions, particularly smaller credit unions or banks with older processing infrastructure, can take an additional business day to actually make those funds available. So you could be waiting 2 days longer than you expected through no fault of the Social Security Administration and no fault of your own. The fix here is simple, but it requires action on your part. Log into your My Social Security account and verify the exact scheduled payment date for the upcoming month. Compare it to your bank's processing policy. And if you are within 3 days of a holiday, check in advance. But that is just number one. And honestly, it is the most straightforward thing we are going to talk about today. Because what comes next is where things get far more serious. Number two, the silent overpayment problem that can drain your benefits without warning. If you have been receiving Social Security for more than a year, listen very carefully to this section. The Social Security Administration has been ramping up its overpayment recovery efforts, And what is happening to some beneficiaries right now is genuinely shocking. Here is the situation. The SSA periodically audits accounts to determine whether people have been paid more than they were legally entitled to receive. Sometimes this happens because of a change in income that was not reported in time. Sometimes it is a clerical error on the government side. Sometimes it is a change in marital status, a work record correction, or even a data entry mistake that happened years ago. Whatever the cause, when the SSA decides that you owe money back, they do not always give you a lot of warning before they start collecting. For years, the agency had a policy of withholding 10% of a beneficiary's monthly payment to recover overpayments. Then, in 2023 and into 2024, the SSA shifted to recovering 100% of monthly benefits in some cases, meaning they would simply hold your entire check until the overpayment balance was cleared. For someone living on a fixed income, having one entire month's payment disappear is not just inconvenient, it can be catastrophic. Now here is what most people never realize. You have rights in this process. If the SSA sends you an overpayment notice, you have 60 days to appeal it. You can request a waiver, especially if the overpayment was not your fault and repayment would cause you financial hardship. You can also request a lower withholding rate if you cannot afford to have your full check withheld. But here's the critical part. You have to act. None of this happens automatically. If you receive any letter from the Social Security Administration about an overpayment, do not ignore it, do not set it aside, and do not wait. Respond immediately, in writing, within that 60-day window. What happens next surprises many Americans, because a lot of these overpayment claims are successfully appealed or waived entirely, but only for the people who knew they had that option. Number 3, the Medicare premium increase that many retirees are not calculating correctly. This one affects tens of millions of Americans, and yet it trips people up every single year. If you are enrolled in Medicare Part B, your premium is deducted directly from your Social Security payment. That means any increase in Medicare premiums directly reduces the net amount that hits your bank account. Now you might be thinking, I already know about Medicare premiums, and maybe you do, but here is where things get interesting. Most people calculate their expected income for the year based on what they received last year. They set up their budgets, their automatic bill payments, their monthly expectations, all based on that number. And then, when the new year arrives and the Medicare premium adjustment kicks in, suddenly their Social Security deposit is a little smaller than expected. Not catastrophically smaller, but smaller. And for someone on a tight fixed income, even a $20 or $30 difference per month can create a ripple effect. Here is something even fewer people know. The Medicare premium you pay is not the same for everyone. It is income-based. The system is called IRMAA, the Income-Related Monthly Adjustment Amount, and it applies to people whose income exceeds certain thresholds. And here is the part that catches people off guard. The income the government uses to determine your IRMAA surcharge is not your income from this year. It is your income from 2 years ago. So if you had a higher income year 2 years back, maybe from a one-time retirement account withdrawal, a home sale, or an inheritance, you could be paying significantly higher Medicare premiums right now, even if your income is much lower today. The good news is, there is a process to appeal your IRMAA surcharge if your income has dropped due to what the SSA calls a life-changing event. Retirement, divorce, the death of a spouse, loss of income-producing property, all of these can qualify. But again, you have to request this review. It does not happen on its own. And the window to act is not unlimited. But that's not the biggest part, because what I'm about to tell you in the next section is something that most people have never even heard of. Number 4, the benefit adjustment that could mean money you are owed right now. Most retirees have no idea that there is an ongoing review process for Social Security benefit amounts, and that some people are legitimately owed back payments because of errors or overlooked credits in their work history. Here is how this happens. Your Social Security benefit is calculated based on your 35 highest earning years. The SSA pulls your work history from IRS records and uses it to determine your average indexed monthly earnings. But those records are not always complete. Jobs where you worked under a different name, early career positions where employer records were never properly submitted, or periods of self-employment where tax filings were delayed. All of these can result in an incomplete earnings record that reduces your benefit without you ever being told. Here is what you should do. Go to the Social Security Administration's website and log into your My Social Security account. Pull up your full earnings history. Go through it year by year. If you see any gaps or amounts that seem lower than you remember, you have the right to request a correction. You will need documentation, old W-2s, tax returns, pay stubs if you have them, but a successful correction can increase your monthly benefit going forward, and in some cases, trigger a retroactive payment for the months you were underpaid. This is not a loophole. This is not some trick. This is your legal right to receive the benefit you actually earned. And most people never check. They assume the government got it right. Sometimes they did, but sometimes they did not. There is one more thing I need to share with you, and like I said at the beginning, this last one may be the most important of all. Number 5, the hidden deadline that can permanently reduce your lifetime benefits. This one does not get nearly enough attention, and it is the kind of mistake that cannot be undone once it happens. If you are approaching 62, 65, 66, or 70, and you have not yet claimed Social Security, or if you are helping a spouse or family member navigate this decision, what you decide in the next few months could affect your income for the rest of your life. Not just this year, not just the next few years, the rest of your life. Here is the issue. Social Security benefits increase by approximately 8% for every year you delay claiming, from your full retirement age up until age 70. That is a guaranteed, inflation-adjusted, government-backed return of 8% per year. There is virtually nothing else in the financial world that offers that kind of guaranteed growth. And yet, most people claim early, many at 62, because they need the money or because they simply do not realize what they are giving up. If you claim at 62 instead of waiting until 70, you could be locking yourself into a monthly payment that is nearly 40% lower than what you would have received if you had waited. Over a 20 or 25-year retirement, that difference can easily add up to $100,000 or more in lost lifetime income. That is not a small thing. That is the difference between financial stability and financial stress for your entire retirement. Now, I am not saying everyone should wait until 70 to claim. Health, life expectancy, financial need, all of these are real factors that affect the right decision for each individual person. But here is what most people never realize. There are strategies, break-even calculations, and claiming options that most financial advisors barely scratch the surface of. There are file and suspend strategies, spousal benefit coordination options, and restricted application rules that still apply in certain situations. The point is that before you make this decision, or if you have already made it and you are wondering if you made the right call, you should talk to someone who specializes in Social Security optimization. Not just a general financial advisor, someone who specifically understands the SSA rules, the COLA adjustments, and the spousal and survivor benefit implications. Because once you start claiming, the clock starts. And while there is a limited window of 12 months during which you can withdraw your application and repay what you received, most people do not know that window exists, and most do not act within it. This is exactly the kind of information that does not show up in your mailbox. It does not come in a government brochure. It is the kind of thing you learn by staying informed, by being part of a community of people who are paying attention. So let me bring this all together. Today we talked about 5 things that every retiree needs to understand before their next payment. We talked about the payment timing trap and what happens around federal holidays. We talked about the overpayment recovery process and the 60-day window that protects you, but only if you know about it and act. We talked about Medicare IRMAA surcharges and how income from 2 years ago could be quietly reducing your benefits today. We talked about your right to review your earnings history and claim any back payments you may be owed. And we talked about the lifetime claiming decision, the one that can lock in or lock out hundreds of thousands of dollars over the course of your retirement. None of these things are going to fix themselves. None of these protections are going to activate automatically. They require you to know about them, to check on them, and in some cases to take action within a very specific window of time. That is why being informed is not optional, it is essential. If you found value in this video, please take a second to give it a thumbs up. It helps more people find this information when they need it most. Share this video with someone you care about, a parent, a sibling, a neighbor, a friend who is getting ready to retire. This could be the most valuable thing they see all week. And if you have not subscribed yet, please do it right now. Every week we bring you the updates, the policy changes, the benefit news, and the practical information that directly affects your financial life. You should not be finding out about these things after it is too late. Subscribe so you always stay one step ahead. Thank you so much for watching, and I'll see you in the next one.